morning, everybody. Welcome to Zoe's Treasures. My name's Tracy, and I'm here with my husband, Noel. Well, not technically here. I am in Nashville. My husband is at home in our studio in Pennsylvania, and we are coming to you remotely today. So tonight is Ask a CPA Anything. So what are your tax questions? I have a few, a topic I could talk about in the meantime if there are no questions, but hold on. My husband's telling me I got to adjust my, okay, there you guys go. He was telling me I got to adjust my phone, and that's what happened. So we're going to deal with my phone the way it is because I'm not dropping it again. Sorry about that. What aren't your tax questions? Well, ask away. Hello, hello everybody. Hi, Tabitha. We are. Let's see. Let me just kind of tell you what's going on here because I know everything looks a little bit different. I am outside. I'm in Nashville at a hotel. I'm here until Monday. And so trying to keep up with our schedule, do this remotely, still here to do the show. However, I was going to do this downstairs and they have like this really pretty like lobby area with like a business setting. And hi, Tubber. Yeah, Nashville's pretty cool. Right now I'm actually in Franklin, which is just south of Nashville. But if you're from here, you know that. If you're not from here, basically I'm like 10 minutes from Nashville right now. But they have a band going on downstairs, which I wasn't prepared for. So I found this outdoor like balcony area. So I'm hiding over here from the wind. So I apologize. Thank you. It does feel windswept. I apologize if you can hear the wind. I kind of found this little like corner alcove. So we're going to hang out here and do the show from here. But tonight is about your tax questions. Anything you want to know, anything with taxes or just general seller support. I'm going to be doing this. You can hear you. Perfect. Thank you. Or you can hear you. You can hear me. Wow. It's been a day. But pretty much anything you guys have questions on, I will try to answer. If not, I thought it would be interesting to tell you guys about some of the IRS red flags. So there's a lot of misconception out there. Do we have to do year-end inventory as resellers? This and that? Yes. Yes, you should. 100%. So now there's two ways to look at this. So I always recommend you are not going to get a really good cost of goods sold for accounting purposes unless you're doing a year-end inventory. You need to know what you had at the end of every year. If you didn't do it, just do it now and then kind of estimate over the last couple of months. You know, anything you sold, you're going to have to kind of work back to what happened and where you were as December 31st. Now, when it comes to taxes, there is a method called the cash method that you don't have to keep track and you can write off everything. I do not recommend that method except in certain circumstances. So it is always best for you throughout the year just to keep proper accounting records, to be keeping up with your inventory, and then definitely taking a good year-end count and making any adjustments that you need to make. Because sometimes no matter how good we do throughout the year, we miss stuff. We just need to true things up at least once a year. The circumstances, so when we're looking at inventory for IRS purposes, just for tax purposes, you can do cash or accrual. Accrual matches your accounting records. That's when you're doing, you're counting your inventory. Inventory is an asset, and then when you sell it, it becomes an expense. That's the accrual method. You should be doing that all year long. Then when it comes, Tober, I see your question. I'll get to it. Then when it comes to tax time, you could elect the cash method where you say, you know what, everything I bought, I'm going to expense, whether it's still sitting there as an asset or not, whether you own it or sold it, you just choose to expense all of it. You can do that. But what happens is you take a huge expense in one year, and then next year when you sell that inventory that you didn't sell in year one, you have nothing to offset it. So there's no expense to offset it. You could end up maybe saving yourself in year one some tax money, but in year two, having a lot larger tax bill than you expected. Now, if you know you're going out of business, you're not going to stay in business next year, then it's a perfect time to take the cash method. If you know there are other types of changes, maybe you're going to have a decline in sales, or you're going to be suspending business for a while, and it doesn't matter having that large income flow, that may be an appropriate time. But it's a really good way to do some tax planning and to meet with a professional to figure out, hey, what works, what would really be the best for me in this circumstance. tax or software that I recommend. So as far as, let me look, did you say software? So any software that I would recommend, I actually, let me say this, I actually don't recommend software. I recommend using a system that works for you, whether that be QuickBooks, Reseller Genie, another type of like computerized software, pencil and paper, Excel. It's more important to have a system that you're going to use on a regular basis than it is to have, than to be using a specific software. Now, having said that, I've used QuickBooks. I think it's overkill for me, even as a CPA, but it is a good software program. My Reseller Genie, I know they are other whatnot sellers or other resellers that develop that. And I've seen them working with some of the community hosts lately. And so there's a lot of talk about Reseller Genie. I've heard it's a perfectly great software too. I don't have personal experience with it, but I've never heard bad things. The only thing bad, not even bad thing I've heard about it, I've heard that it's just not as intuitive. So you may want to be pretty comfortable with technology if you want to use it, but it works. So whatever is you're going to do and do on a regular basis. Can you switch from cash to accrual at some point? You can. It does allow you to switch. I would definitely consult a tax professional when you do that, because if you've already expensed inventory and now you're going to accrual, you got to make some adjustments to account for that. It gets a tad bit tricky, totally doable, but that definitely would at least get a tax professional for the year that you switch. But yes, you are allowed to switch. The second one is Reseller Genie. Excuse me. I think it's called My Reseller Genie. If you Google it, I'm sure it'll come up and you'll find it. It's a pretty popular accounting software and inventory management software for resellers. Like, it's been out for, I don't know, 5 or 6 years now, if not more. Under the financial statement, what is the difference between seller paid shipping and handling and shipping surcharges and fees? Seller paid under the financial statement. I'm not sure what financial statement you're talking about, but to me, the difference would be how I would look at those is seller paid shipping is if I'm offering reduced or free shipping and I'm paying shipping on behalf of my buyers, if I'm doing it for you, I'm going to classify that as seller paid shipping. But shipping surcharges and fees to me would be if I'm buying inventory and I'm charged any type of shipping or extra charge or fee for what I'm buying, because then that rolls into my inventory. Hopefully that answered your question. If I didn't, just try to rephrase it or ask me again and we'll get there. Sometimes it's hard when we can't like talk face to face. My Reseller Genie, thank you. Yes, okay. It's like $12 a month. Yeah, it's pretty reasonable, whereas QuickBooks is more expensive. QuickBooks could be like 30, 40, if not a little bit more on a monthly basis. Also the shipping you pay for, it's also for the shipping you pay for giveaways. So shipping you pay for giveaways, I would include that under my marketing. To me, if I'm doing a giveaway, speaking of, let's run a giveaway really quick here. Okay, we're going to start a giveaway. If I'm paying for shipping on a giveaway, that's to me is marketing. My giveaways are marketing. So that's where I always classify giveaways, including the shipping cost for that, because it's kind of all one and the same. However, I say this frequently, when it comes to the IRS, while there's rules and regulations, there's a lot of gray area, a ton of gray area, and a ton of things that are open for interpretation until they're like tested in court cases with the IRS. And where you classify something on your Schedule C, like let's take office supplies, could be a really, you could buy boxes and put those or paper and put that under office supplies, or it can go under, boxes. Let me stick to one. Let's do this. Let's say, if you bought shipping labels, those labels that you put into your thermal printer, you can list those under supplies, like office supplies, or you can list them under shipping supplies. Does it really make a difference? No, at the end of the day. That's one of those things, it's like gray. So where you're putting shipping costs, unless it's like blatantly obvious, there's some of those that the IRS doesn't care as long as you're being honest in it, and you have some leeway on where you're listing it on your Schedule C. Looking to see if I missed any other questions. If you guys have another question, feel free, go ahead and put it in there. Let me pop this chat out so I can actually see what's happening with it. There we go. Okay. While I'm waiting to see if you guys have any questions, let's talk a little bit about what are red flags. We hear a lot about, oh, if you do the home office deduction, that's a red flag. Don't do that. You're going to get audited. Well, first off, the IRS historically, based on recent years' numbers, audits less than 1% of all tax returns. That's not very many. Think about how many, hundreds of thousands, if not in the millions of tax returns they process, and they actually audit less than 1% of those. And when we say less than 1%, most of that 1% is for people who make over 100,000. All right, not even 100,000. Wait, I wrote the number down. It is 1 million. More $1 million. So most of that 1% is if you make $1 million or more. So your odds, if you make less than $1 million, of getting audited are actually go down to about 0.4%. That doesn't mean do what you want, no fear, no nothing. I'm just saying there's a very small amount of people that ever even get audited. I spent $5K on inventory, but only have $1K in sales. Would I be able to possibly get a refund due to that? So I was supposed to be a seller. When we're talking about your Schedule C, we're not really talking about refunds or not. We're talking about net profit. So when we say net profit, that net profit from your Schedule C goes into your personal tax return, into your 1040. So whether you get a refund or not really depends on all the other factors that surround your personal tax return. Are you married? Do you have kids? What your other income is? So there's a lot of stuff, do you itemize? Do you not? That goes into that. So I wouldn't be able to tell you if you can get a refund. And particularly just the fact on inventory, that's not something that would drive a refund. But if you spent 5K on inventory, but you had 1K in sales, not all 5K of that is even deductible. Again, we go back to you could do accrual or cash, but the best way is only taking the inventory that you actually sold as an expense. You're very welcome. If I don't answer a question, if I try to and you're like, I'm a little cold. It's not super bad right now. I'm in like this little alcove out of the wind, but I do feel a few raindrops. So if it gets any worse, we are going to have to like cut the show and run inside. But if I don't answer a question enough, if you're like, hey, wait, I still don't understand, just keep asking. We'll get to an answer eventually. Is it okay to expense 100% of the shipping cost, but make credit adjustments for the portion paid by the buyer? No, it is not. So actually, everything that comes into you, that shipping that the buyer pays, that's income. And then you would deduct all shipping cost. So you're not, I guess in a roundabout way, what you're saying is a way to say it. But the 1099K that Whatnot gives you is gross. Before any fees or shipping expenses are deducted from that, it is gross. It's all the money that was considered gone to you during a show. So all of that money, then you list on your 1099, then you would put your shipping adjustments after that. Anything that you physically paid out in shipping. So I would expense 100% of the shipping cost, which is offset by the ship. Yes, correct. There you go, Holly. Yeah, I think we're just saying the same thing in different words. Tennessee Honeysuckle, congratulations. You got that giveaway. All right. I'm going to keep watching I got the chat popped up over here, so I'm going to keep my eye on it. Some of the things you may want to watch for if you're afraid of being audited, and again, please ask your questions. I'm only talking about this in the meantime to fill dead space here so that there's something to talk about. Some of the stuff you may want to pay attention to is failing to report all of your income. Now, there's a lot of different red flags. I went and pulled out the ones that I thought were really pertinent to resellers. So that's kind of what I focused on. Shipping does not come to us. So only the shipping that you pay. Correct. You are 100%. Another question. Absolutely. Keep asking. 50% of my home is being utilized for my business. What can I deduct? Okay, so this is a really good question because that goes to the home office expense. There's two ways to deduct your home office expense. IRS allows two different methods and you can pick the one that you want. You can do actual or you can do the simplified method. So the actual method says you take your total square footage of your house and then you calculate how much is used by your business. Now, 50% is quite a lot. I would be really sure that you are using 50%. The IRS rule says that the portion that you're going to claim has to be used primarily and exclusively for the use of your business. So if it's not primarily and exclusively, you can't claim it. So if you have a dining room table that you're like, yeah, I do shows, I set up here all the time and I do shows on my dining room table, but then between shows, you move everything off and your family eats dinner there, you can't take that space. That's not primarily and exclusively used. So you just make sure that you're following the correct rules. So then once you make sure you're following the rules for calculating your square footage, in the actual method, say if you're using 50%, you would be able to take 50% of the mortgage interest that you pay or the rent that you pay, any utilities that affect that space, such as electric or gas for heat, and repairs, like if you had to paint that space, maintenance, and you can accumulate all of those costs together and use the 50% of those costs. That's the actual. There's a lot more record keeping, administrative stuff that you have to do for that. The simplified method, the IRS says, you know what? We understand that could be a burden to particularly smaller taxpayers. So we're going to allow you to use a simplified method for home office deduction, which they allow you up to 300 square feet. You don't have to keep all of the electric, all of that. It's just $5 per square foot up to 300 square feet. So it's just a very simple, they're like, hey, we're just going to give you $5 per square foot. That's the simplified method. So if you have 300 square feet or less, or even around like 325, 350, you may be better off just doing the simplified version when you look at the time factored in there on doing all the administrative side of trying to figure that deduction out. If you can deduct 50 without being utilized for your business, what can I, so, okay, I read that one. We're good. Okay, I think hopefully I answered your question with that one. Be careful with home office though. A lot of people think it's a red flag. It's not technically a red flag. It does become a red flag depending on the big picture. So think about, put yourself in the shoes of the IRS. If you have 1,000 square foot home and you tell the IRS that you use 700 or 800 square feet of 1,000 square foot home, they're going to be like, where do you live? Where do you go to the bathroom? Where do you cook? Where do you do your daily activities? Like, you've got to make sure that what you're doing makes sense. So it's not technically a red flag, but if it starts to look like it doesn't make sense, it could quickly become a red flag. So that's on the home office. But don't ever shy away or be scared to use the home office. It's just one of those deductions that is easily abused. So when used in excess, when it looks odd, that's when you got to worry. If you're not doing that, you have no worries. I always say, besides the fact that the IRS doesn't audit a whole lot of people, if you're being honest, there's nothing to worry about anyways. The majority of audits are done through the mail. If the IRS is going to question something, they're going to send you a letter most often, and they're going to be like, hey, I need some more support for this deduction. You're like, cool, I did what I was supposed to. You go pull your accounting records out, you pull your receipts, you mail them copies, end of discussion. It's usually as simple as that. So as long as you're doing what you're supposed to, all right, you guys, you're going to have to bear with me. We're going to like run inside. So hold on, because it is starting to rain. I am getting soaked out here and my equipment's getting wet. So just bear with me. We're just going to move inside.
Oh boy, oh boy, oh boy. Welcome to the live.
All right. This is live whatnot right here. Let's see if I can do this. Hold on, I got to grab my bag. But I'm getting rained on.
Isn't this fun? Yeah, because otherwise she's going to say that she needs a new computer.
I think it's a perfect reason to get a new computer.
Negative.
They're having some a bunch of cheerleaders. I'm at a cheer conference and there's a bunch of cheerleaders in the gym and they're so cute. They're over there jumping around. All right. You know what? We are in the gym. We're just going to sit here. Is this too echoey or are we okay here? We're good? All right. We're going to sit here and do the show from right here, you guys. Let me just get my computer back out. Let's see what we can do here. All right, there we go. I'm sitting on a squishy bench, so I'm hoping nothing falls over. And now I can see your questions again in about 2 seconds.
Losses, normally they're not a red flag, especially if you're a new business. The IRS will expect to have a new business with a couple of losses.
And that's actually a really, really good question, because that's one of the things I wrote down as a red flag, but not technically a red flag. So when it comes to losses, if you are taking excessive losses year after year after year after year, that can become a red flag that they would look at. But just having a loss itself is not a red flag. It's when it's year after year. Now, because what happens is the IRS starts to think that you're having a hobby, that you're trying to write off losses instead of a business. This is not that 3-year rule. People will hear stuff where they're saying, oh, well, if you take a loss for 3 years, you're going to get audited. That's not what it is. That's misinterpreting the rule in itself. But it's taking excessive losses multiple years in a row with no sign of growth. So if you take a loss for a couple of years, what you would normally expect to happen is, maybe, I'm going to just use some fake numbers here. Maybe the first year you have a $5,000 loss. And then the second year, maybe it's 3,000, and then 2,000, and then 1,000. That in itself is not a red flag, because you're trending to making a profit. That's very realistic of a business trying to make a profit, right? So that's not a red flag. But if you continue to take excessive losses year after year, particularly if you have other income that you're offsetting, hold on, something's going on with my whatnot. Okay. Particularly if you have other income. So losses that you're taking from whatnot. I'm sorry, you guys, my computer's like, my show just closed on my side, so I can't see questions. I'm trying to open it so I can see questions again. When you have a loss on your business, it can offset some of your W-2 income. So this is a way that's misabused by people, where they'll show excessive losses on the Schedule C in order to reduce their taxable income from their W-2s. So as long as it's not excessive year after year, and there is a trend of showing business growth, you should be okay. Similarly, is claiming a small loss a red flag, like only a couple hundred? No, not at all. Not at all. It's not. Again, we go back to how many years in a row are you claiming the loss? Are you trending in the right direction? It goes back to intent and what you are doing. If you're audited for something like that, all you have to do is to step back and say, well, here, let's take a look over the years. Here's my business activities. Here's the things I've changed to make money. The IRS, if they do audit you, if they question you on that, what they're questioning is if you're writing off expenses that are truly a hobby expense that you're not allowed to write off. So it's making sure that you have all your ducks in a row, and then you're okay when it comes to losses. Does that good? I'm glad that makes a lot of sense. Sometimes I'll answer a question and I'm like, I'm not sure if I answered that appropriately, or like, or did I just talk in circles? All right, my husband is always the producer, telling me to adjust my phone the right way. I'm like, okay. Something else you may want to take a look at. We talked about reporting all of your income. This is highly, highly, highly a red flag. This is the one that if you're going to get caught, this is the easiest one for the IRS to catch you on. Actually, there's another really easier one, and you may even laugh that people do this. But income. Any of the platforms that send you a 1099, you need to make sure that you are reconciling your records to the 1099.
Yes.
But talking earlier, that was him. Yes.
That's me.
Hi. Sorry. Yeah. Okay. I got people walking by, so we've got an audience. So you need to make sure that when you get your 1099s from whatnot, eBay, Macari, whatever it is, that you're reconciling your income to that. If they send a 1099 to you, they're also sending it to the IRS. And if the IRS gets a 1099 that you're not reporting, that is like almost guaranteed you're going to get questioned about it. That is the easiest way to get a letter from the IRS. The other thing is, if they're reporting, say Whatnot reported $25,000 of sales, and you only report 20,000, that's another red flag. If they're reporting a lot more than what you have, if you see a discrepancy like that, you should be reaching out to Whatnot and figuring out what that discrepancy is, because that is one of those things that will cause an audit. So how do you do that if you're not there? Inquiring my, how do you reach out to Whatnot if there's a discrepancy on your 1099? How does my hubby talk?
How do I do
We
this
are
if I'm not
so
there?
he's in Pennsylvania. I'm in Nashville. You go ahead, tell him how you do it, honey. You know, you're the techie.
So, I bring you
Get in the
this
bubble.
live.
Let them see you. Let them see your face, my love.
I can't. I have to switch things around. It's not that easy.
Okay.
So basically, what I do is she's in Nashville. She sends me a video feed. I capture that video feed and then I send it to you guys. Our studio's in Pennsylvania. She's in Nashville, and we bring you this remote. It's a little convoluted, but it works wonders. If you are curious to see how this works, one of the greatest examples is our podcast, where Tony and Lysandra are in Kentucky. We're in Pennsylvania, and this Sunday we're gonna have Miss Julie JJ Shopper, who's gonna be in Detroit.
From Michigan.
Yes.
Yeah.
So I bring all those people together and I feed the video out into the YouTube or Whatnot in this case.
So he's really
have-
good at all of this. I don't
If you have
understand any of it.
questions, I'll put it on the chat.
Yeah, if you're trying to do anything like this, he's always happy to answer your questions. No charge. Just message him. He'll put his contact in there, and you can message him. He'll help you set stuff up all the time. But he had to come up with this because I travel usually at least 1 week a month for my 9-to-5 job. So he had to come up with a way for me to continue doing Whatnot while I'm traveling. Tomorrow I'm doing a preview show, but Sunday I'm actually doing a selling show, Battle of the Best, and we'll do it remotely, where he's going to be showing the item and I'll be talking about the item. So we just kind of coordinate ahead of time, and he handles all the tech on the back end. So that's how we do that. Another item I wanted to talk to you guys about that could be a red flag. So makes just kind of one of those things to watch out for. And this is the one you might laugh at. You'll not believe that people do this, but getting their name or social security number wrong. That is the number one reason the IRS sends letters out. So the number one reason is because you get your name or your social security number wrong. I'm not sure how people do that. Like, those are pretty basic pieces of information, but that's the biggest IRS audit type thing that causes an audit. The other thing is, now this becomes really important if you're married. So when you're married and you file a joint return, you have two names that go on that return, you and your spouse. Whoever, with the first year that you get married, whoever's name you list first needs to be consistently listed first forevermore throughout that course of the marriage. So whoever got their name put in as number one gets to be number one on the IRS tax return for the whole course of that marriage. If you switch those names, that confuses the IRS. It doesn't really confuse the IRS. It confuses the IRS's computers and can kick out and cause inquiries into your tax return. I know it's super, super simple, and it's one of those things that people are like, what's going on? But it's a very common one that happens, that when you switch those names. Now, does it mean that they're going to dig into all of your accounting records? No. But if you have things, particularly there's times when maybe you have a Schedule C and your spouse has a Schedule C, that can start to cause some confusion in there. There's special elections that one spouse may make that the other spouse may not make. That can cause confusions with that. So if we are an LLC, how is that handled in regards to how we file as a husband and a wife? Really good question. So it depends who's listed on the LLC. So if you are partners on the LLC, there are some special rules that go into it's like a joint venture rules that you would need to apply. That gets a little more technical than what I would go into here on the show, just because it applies to such a small amount of people. If you are a single member LLC, just my name on the LLC, we're Zoe's Treasures, it's all under me, Tracy, then I am the same as a sole proprietor. I file a Schedule C, I put my name on there. Even though I'm an LLC, if you're an LLC as a single member, you still file that Schedule C. That makes it really simple. Again, where it gets a tad bit more convoluted and a little bit harder is when you both are listed as members on the LLC. If you established your LLC that your husband has a certain membership and you have a certain membership, again, that becomes like a joint venture, and you probably will need to file a 1065, a completely separate LLC tax return in that case, versus filing on your Schedule C. There's a lot of specifics that go into that. So without knowing it, I couldn't like talk about it a whole lot more, but there are more rules to it. Under file Schedule C under 1040 for husband and wife. So for husband and wife, let's talk about the different scenarios where this may happen. So if husband owns a business, husband's an Uber driver, wife is a whatnot reseller. Those are two separate businesses. Those are two separate Schedule Cs that go on the same 1040 tax return. Okay, that's one scenario. Another scenario may be wife works full-time job. She's W-2 income, has nothing at all to do with the businesses. Husband is a whatnot reseller. That husband's name goes on that Schedule C. It still gets filed with the personal tax return. Another instance, only one of the spouses has an LLC as a sole single member LLC, that they file a Schedule C. Where it becomes a little more confusing and a little more rules apply is when the husband and the wife are joint owners, when that LLC was set up as a separate legal entity and they were both members in that LLC or partners in that LLC, then you have to follow some other specific rules. I think I covered most of the scenarios there. I'm going to give you, for instance, for us, for me and my husband, the business is under my name. I file a Schedule C with my name, but it goes on our joint tax return. So I'm a sole proprietor. Be careful with filing LLCs. This is one of the reasons. I'm not against LLCs. There are legitimate, very smart reasons why an LLC may make perfect sense for you as a business owner. However, LLCs come with their own set of complications. You are creating a whole nother legal entity of responsibilities that you have to maintain. There is a lot of times when creating that is not absolutely necessary for the business you're doing. So you want to make sure that before you create a whole nother legal entity that it makes sense. Again, there's times that it does make sense. So, and what I advise is talking to a CPA and an attorney to figure out when it makes sense for you. Some of the things they're going to ask you, some of the variables that go into that decision are, what are your future plans? Do you ever plan to have partners? How much control do you want over your business? What are your growth? What are you looking at for growth? Miss Jenhead is reading with a party of 3. Thank you so much.
Welcome in, Raiders. Glad you can join us on this business and tax discussion.
Thank you so much, Miss Jenhead. I know what you do, but not everybody else knows what you do probably. So please put in there when your next show is, what you sell. Give us all the details about yourself so everybody can follow you. And thank you so much for bringing your people over. And if you came over with Miss Jenhen, my name's Tracy. This is Zoe's Treasures. We are doing a tax talk show. So I am a CPA. You can ask me anything and I try to answer you the best that I can. Okay, this and that for the LLC. So right now we're talking about when it may or may not make sense to have an LLC. It could protect your personal property. So one of the other things that an attorney or a CPA is going to ask you is, what are your assets? Do you own a warehouse? What is the liability that you have opened yourself up to as a business? I sell vintage decor online. People don't come into my home. There's not a lot of liability for me. However, maybe if you're selling health and beauty, or if you have a warehouse that people can slip and fall, or you have to insure in some way. So part of the questions they're going to ask you is about how much liability you open yourself up to. Now you're going to hear, just like what you said, oh, it protects your personal property. It protects your house if you ever get sued by somebody. True. It can protect your personal property. That is a benefit of an LLC. But first, I would ask myself, what are the odds of being sued? What's that liability? Is the reward, the risk, the action worth the reward? Like, is the administrative burden of having an LLC worth the pure chance that maybe I might get sued someday? For some people, that answer may be yes. For some, it may be no. This isn't an LLC isn't a one size fit all type thing. And also, when you create an LLC, this is what nobody tells you. This is what you don't hear. Because, hello, a Monster Mama, because the LLC is its own separate legal entity, you have to treat it as such. Do you know what that means? Having its own bank account, doing all of your accounting, keeping all of your business records, creating a set of minutes, like a corporate minutes once a year, re-registering with your state every year. There's a lot of stuff. And if you don't do any of those, or you miss doing some of those, guess what you've just done? You breached your corporate veil, and you've opened up the door for those lawyers to attack your house anyways. So yes, it can, if you were treating it in the true sense of a business and doing everything you need to. So there's a lot of responsibility that comes with it. There are drawbacks to it. Again, and the other drawback, and again, don't take me wrong, I am not against LLCs. I'm against LLCs being proposed as the one-size-fit-all solutions for resellers across the board, because it's not true. It really depends on the unique set of facts and circumstances of your personal life and your business life, and how that is all structured together on whether it makes sense. You also have to think about this. If you've created this legal entity, before you do that, just me as a sole proprietor, if I wake up one morning and I decide I'm done, I don't want to do this anymore, guess what? I'm done. Turn off my phone, shut the computer, I walk away from my business. That's all I have to do. As an LLC, now you need to dissolve a legal entity. Now you have additional steps and money that you have to pay to just end what you didn't want to do. So, it's just one of those things that you will see this, and this is my soapbox. People have been around me for a while. They're probably rolling their eyes. They're like, oh no, Tracy's getting on her LLC soapbox, because it is kind of my soapbox, is that almost every software you use, when you're researching stuff, it's like, let me help you create your LLC. It's so easy. Click this button. It's like pushed and pushed and pushed. And there's a ton of resellers out there, because their CPA told them to do it because it was right for them. Then they automatically tell other people, well, I'm an LLC, so that's what's smart. That's what you should be too. But it's, again, not a one size fits all. Because it's right for one person doesn't mean it's right for the next person. Do I only need to get an EIN to request not being taxed on whatnot purchases? Okay, so Lily, an EIN is an employer identification number. It's basically a social security number for your business. Has nothing at all to do with sales tax. So an EIN is, you get it through the IRS. It is a social security number for your business. You usually get an EIN, one, when you create a legal entity like an LLC, or if you're going to hire employees. Those are like the two most common reasons to get it. What you want for sales tax is called a sales tax exemption, or a reseller's certificate. A tax certificate. Those you get through your state. So you can get it if you're buying to resell. Totally appropriate move. Contact your state. Before you do that, just read about it. Every state usually has some really good information on their websites about them. Some states require you to file like a informational return once a year as part of that. Other states don't. So just make sure you know what your responsibilities are, but it's definitely something that a lot of resellers have. And I recommend it depending on the amount of inventory you purchase, because it can save you money on that sales tax. How do you dissolve an LLC? So usually the way to dissolve an LLC is, one, I would get an attorney to make sure it's done right. So depending if it's a single member LLC or multiple members, there may be different steps if there's multiple members. But generally, it's as easy as dissolving it. There's a form that you fill out, and usually some type of a fee through your state to dissolve it. And then you also need to file that as a dissolution with the IRS. Like on a tax return, you're going to have to mark that it's dissolved, particularly if you're filing a 1065, which is a separate LLC tax return. If you have more than one member, if it's not a sole member, you have to file a LLC tax return. Then you have to file a final return with the IRS. So it's usually not that hard. The more members you have, the more complicated it becomes because you have duties to each of the people that have an interest or a vested interest in that business. Can you get the reseller certificate as an individual, or do you have to form? No, you can get it as an individual. I have a resale tax ID number, a resale number. You can get them as an individual. It allows you to buy wholesale and resale. So this, a lot of times people are like, well, I want to buy pallets or I want to buy wholesale, and they're asking for a sales tax exempt number. Just go to your state and get one. It's as simple as that. I recently heard that I need an EIN to shop wholesale stores. What's the downside? I would question why you need an EIN to shop wholesale stores. That's not really necessary. It could be specific vendors want that as a requirement. But again, your social security number is the same as an EIN. Now, if you're not comfortable giving out your social security number, perfect reason to get an EIN. I mean, it's not going to hurt you to do it, but it's just not always necessary. You do need to make sure if you get that EIN that you're putting it on that Schedule C so the IRS knows that that EIN goes to that business. Does Whatnot charge sales tax to buyers? Yes, they do, all the time, as long as their state requires sales tax with the state that they're buying in. If not, and we have collected no sales tax, then how does that affect our sales tax return? So Holly, this is the wonderful thing that our 8% on Whatnot pays for, is they handle all sales tax for us. So that's one of those things that as resellers, we can just be like, don't need to worry about it. Thank you very much. Whatnot, eBay, Macari, those are, a lot of those platforms are the same way. They handle your sales tax for you. As a reseller, when you have to worry about sales tax and sales tax returns, is if you're doing like markets or craft fairs, you're dealing personally with customers and you're collecting the money in the sales tax. When you're personally collecting it in those instances, then you do need to be aware of the sales tax laws in your state and comply with remitting it properly. But for Whatnot, we don't have to worry about it. Must one dissolve if it was an LLC acting as a sole proprietor, only one member? Yes, because you, even if it was one member LLC, you still formed a legal entity. You still need to dissolve that entity. Is it worth getting an LLC? Timeless. Again, I go back to talk to a CPA and an accountant. They're going to ask you a ton of questions about your all the facts and circumstances and variables in your situation, and then they'll help you kind of come to that conclusion on whether it makes sense for you or not. As a general rule, somebody just starting out reselling, if you're not doing something that opens yourself up to a liability, as a general rule, it's just you, I'm going to sell some clothes on Whatnot, I would not jump into an LLC immediately. It's a progression. Usually most of us start as a sole proprietor. We start to grow. We want to hire employees. We want to buy a warehouse. We start to get into situations that we start thinking, hey, this is getting more complicated. I may need that legal protection. Then we start talking to people about our CPA or attorney. Is this the time to get an LLC? The next step after that, once you have an LLC, a lot of people, when you get to making about $40,000 to $60,000 of payroll for yourself a year, it becomes a natural step to do what they call an S election. An S election is just an IRS election that kind of lays on top of that LLC, and it helps you be taxed in a different manner. But that's usually, you don't even start thinking about an S election. You know, they call it an S corp. You may have heard like people say, "Oh, I'm an S corp." You're never just an S corp. You're an LLC with an S election. You're a corporation with an S election. That usually comes later when you're actually taking 40, 50,000 or more in payroll, because there's a lot more responsibility and cost that goes into that and requirements. So you want to make sure that you're making enough money to offset that. So usually our beginning stages of reselling, that's not even a consideration that's going through anybody's mind at that point. But if you get on here, we're all on here to be successful and to make money. You start growing, you start making a lot of money. We want to start thinking about it. When you get to that point when you're like, man, I'm having significant income, I want to start really drawing a payroll. Definitely, I mean, you should be talking to a CPA and a tax advisor. Another person that you should be talking to, I am on again for a little bit longer. Another person you should be talking to that a lot of people forget about, particularly those of you who are like, look, I want this to be my full-time job. Those of you who are looking to replace a 9-to-5 job with a Whatnot business, that's wonderful. I am all about having your dreams and working towards them. You might want to talk to a financial planner, because it's not just about replacing your paycheck. It's about retirement planning. What are you going to do when you get older? There's a lot of benefits that you lose from working for somebody else. So having a financial advisor in addition to a CPA and an attorney is a good step before you go full time, because there's just so many things in there, and each one of them come from different angles and advise you in different manners, and together it forms a whole comprehensive kind of opinion and process for you to follow. One of the things that people don't think about, is replacing their 401ks. So I'm not going to ask personal questions, but a lot of us, when we work for somebody else, we have a 401k, we have some type of retirement plan that not only do we pay into tax-free, that our companies usually will match some portion of those dollars. When you work for yourself, there's nobody paying a 401k for you. You need to set up some type of an IRA or other retirement vehicle to put money away for retirement, because nobody's helping you with that. That's on you. The other thing, a lot of people, this maybe isn't so much tax related, but it's for those of you that are thinking going to a full-time business or that level of growth, is that when you're working for yourself, there's no PTO, there's no time off. So you need, before you're taking those steps and fully relying on Whatnot as an income, you need to start thinking about, do I have short-term disability and long-term disability insurances? These are things that a lot of times are provided by an employer, because when you're in this self-employment type business, if something happens to you and you're not doing shows, then you're not producing income. And then what happens? You can't pay your bills and it spirals. So setting yourself up with all these other types of protections is part of being a good business owner as you grow and expand and get to that level of like, hey, this is going to be my full-time income. And those are the sides of it that people don't talk about. People will think of, oh, I make, $80,000 a year on my W-2 job. All I need to do is make $80,000 on Whatnot and I'm good. You're not really. You need to make a lot more than $80,000 in order to replace an $80,000 job. So the other side of that too, that people don't think about, and this is totally tax related, for no matter what size business you are, we pay self-employment tax. So on your net profit, let's just really quick review if anybody's not super familiar with net profit or it's your first year. You take your gross income, everything that you earn, you take out your cost of goods sold, you get to your net operating profit. Then you take out all those other expenses till you get to your net profit. Your net profit, as self-employed individuals, we pay our Social Security, Medicare taxes on that. 15.3% we pay. Now, there's a little credit. We get some of that back through when you're filling out your Schedule C and your self-employment schedule that goes along with it. There's a portion of that that's offset, we get back. But let's just stick with the 15.3%. When you work for somebody else, when you go to a job and you're a W-2 employee, your employer pays half of that for you and you pay the other half. Well, when we work for ourselves, we're paying that 15%. And a lot of people don't think about that. They're like, wait, what is this? I got to pay federal withholding and self-employment tax on top of that? That can add up really quickly. So that's when we're telling you, when you're doing this as a part-time thing, you should be putting about 18% of your net profit away for taxes. That's going to cover that self-employment part plus your withholding part. If you're doing this full-time, you probably should be putting around 27 or 30% away for your taxes. Do you have any specific advice for retired people who are doing this as a side and to stay active? No, I mean, not particularly. I guess the only consideration you would really have if you're retired is, I'm assuming if you're of retirement age, you're possibly of Social Security age also. So you may also be receiving Social Security income. If that is a consideration, there are income levels to Social Security that you can make a certain amount of money before it affects any of your Social Security benefits. I don't know the exact dollar off the top of my head. It's around the $16,000 mark, I want to say, but don't quote me on that. That's not a thing that I'm an expert in, and I would have to go look it up. So if not hurting Social Security benefits is part of your concern, you would need to make sure that you're planning for that on Whatnot, that you don't want to do shows every day of the week and be selling like crazy and 5 months into it be like, oh my gosh, I made so much money, I'm losing my Social Security benefits. However, if not having those benefits, if you're going to make so much on Whatnot that Social Security doesn't become super important by that point, These are all like tax planning, financial planning type things, scenarios that you would want to sit down and work through with somebody to make sure that you're achieving the right goals and not hurting yourself in the long run. But just doing whatnot on the side, especially in a very small manner, shouldn't hurt you or affect you with your Social Security until you hit a certain income amount. But you want to plan for that. Like you want to know, what are your whatnot goals? I'm assuming, like, this is my retirement plan. Eventually, I'm not going to work a 9-to-5 job. I'm going to be doing whatnot, whether it be when I retire or whatever. But at that point, do I really want to be grinding it out, 100 hours a week? Because let's face it, when you're self-employed, when you're doing this to replace an income, you're probably working far more than 40 hours a week. So do I want to, when I'm retired, be grinding it out that much? Do I want to make sure I have enough income through Social Security, retirement accounts, or whatever, so that this becomes more of a let's stay active, have fun thing versus an income producing thing? And that's all goes to planning. And this is no different no matter who you are. Your tax planning is just as important as your business plan. I don't know if I'm a huge proponent of creating a business plan, and I don't know if you've done that or not, but your tax picture in that is a part of it too. Taxes aren't just an April 15th thing. Taxes are a living, breathing thing that you should be thinking about as a business owner and part of the big picture overall. If I have a sales tax exempt number under a business name in Tennessee, they expect to get quarterly sales tax returns. Whatnot does not file those. And this is so, like, Tennessee requires it, and this is what I was saying, some states require filings. If your state requires filings, those filings are on you. But if Whatnot is handling the collection and remittance of that tax, you don't have to report that. Whatnot reports that. What you're reporting there are either zero returns, so you're just putting zeros in, or if you're selling on a face-to-face basis, Facebook Marketplace, where you may be charging tax, fairs, markets, like you're doing like a vendor booth somewhere and you're collecting those sales tax, then you're making sure to report that. Not every state has that requirement, but some states do. And that's when I originally was talking about, I'm like, make sure you understand your state laws with that. That is really what it is for us right now. And we expect losses at first, and really small. Okay. So then you should be pretty good. Just make sure that you're getting with somebody who can like help you plan that out, just to make sure that you know exactly where that limit is. Like, hey, I can't go over this, or this is what's going to happen if I do go over it, so that you're prepared for that. That would be my biggest thing, is just to make sure that you know what's going on with it. Let me really quick, are we nearing an hour? We're kind of getting close to an hour. So I'm going to give you a few more IRS red flags and wait and see if there's any other questions before we go and raid. Some of the other things you want to look for, particularly as a self-employed person filing a Schedule C, just things to be cautious of, that will throw up a flag to the IRS, is claiming 100% use of a vehicle. This is kind of like going back to how much of a home office are you claiming? If you have a personal vehicle that you're telling the IRS, hey, I claim 100% of this, even if you're keeping, you are so very welcome. Thank you for being here and listening. I know you guys can do a million other things on a Friday evening, and you're here at a tax talk. So I generally really appreciate that, because I know taxes are not the, super fun, hot topic to talk about all the time. When you're claiming your use of a vehicle, which you should, mileage for last year was 70 cents a mile. You should be keeping your log and claiming that mileage. However, one of the things you have to report to the IRS is how much of that vehicle is being used for business purposes or for personal purposes. It's part of that section of your Schedule C that you fill out. If you say your vehicle is 100% business use, that is definitely going to raise some eyebrows at the IRS. Not that it can't be. If it is legitimate, it can be, particularly if you have another vehicle for use as a personal vehicle. But if you own one vehicle and you're telling the IRS that you use it 100% for business, you're probably not being truthful. So just keep that in mind. Again, it goes back to reasonableness. All of these red flags goes back to a level of what's reasonable and what isn't. Just put yourself in the other person's shoes. It's no different than any other transaction you're doing, right? Even though it's taxes. Thank you so much. I appreciate that. What else? We talked about, this is a big one, you guys. This is one of those things that will throw up a red flag. And this is one of those things that I have actually heard bad advice be given out by other whatnot people giving tax advice. is meals and travel. So when you are doing certain things for business, meals and travel can be 100% deductible. Or, excuse me, it could be a legitimate deduction. Meals at 50%, travel, you can write off hotel rooms, airline tickets, things like that. If it is for a legitimate business purpose. And I'm talking about in the country. If you travel out of the country, there's a whole nother set of rules and it gets far more strict for going out of the country. So let's talk about in the country. But when it's not supported by your revenue, if you say that, oh, I traveled to all these whatnot meetups and I'm writing it off. I see your question. I'm going to come right to it. Reclaim Vintage. Thank you. If you are like, oh, you know what? I'm going to go to every single whatnot meetup there is this year and I'm going to write off all those expenses. Well, the fact that you go to a whatnot meetup, your airline there, your hotel, that is deductible. 50% of your meals for you, the business person, is deductible. Those are legitimate business expenses. However, if you do this, let's just say you go to 8 meetups, but you don't have much revenue. You maybe made $1,000. Proportionately, that doesn't look good, right? Proportionally, if I were an IRS person, I would be like, you're saying, because you go to this as a business expense, marketing, meeting other people, drumming up business, right? That's kind of part of this purpose of these, but you're not making any money. And it's not the fact that you're making losses. We're talking about in proportion to your gross revenue. There isn't a magic like percent that makes it okay, but you got to look at reasonableness, right? And you also look at what year you are in your business. You may do more networking in year 1, have more expense, and then in year 2, that expense goes down, your income goes up. So it's looking at the bigger picture, but that could be a red flag. So it's something you want to keep in mind, because a lot of people will tell you, oh, go travel, it's deductible. If you're doing this for business, it's deductible. Yes, it is. In proportion to your revenue, you got to make sure that it makes sense. At the end, will you explain a bit more about the leadership program you're offering and the dates, please? Absolutely, Reclaim Vintage. So the Ledger to Leadership is the one I think you're talking about. Tabitha, I'm going to answer your question just one second. Ledger to Leadership is the one I think you're talking about. That is the accounting course that I'm doing every Monday night for resellers. It's at 6:30. This Monday is the only exception because I'm traveling this Monday, but the shows are listed all under my, if you go to my profile, you'll see all of the shows listed. I am actually teaching resellers basic accounting tools that you need for your business. We are going into week 5, but weeks 1 through 4 are on YouTube, so you can always watch them at your leisure. We started with week 1. We're going into week 5, not this Monday. Next Monday will be week 5. So you have almost a full week if you want to catch up. I do a quick review at the beginning of each week of what we've already done. But week 1, we started with, what is your basic accounting equation? Assets equal liabilities plus equity. And then revenue and expense hides under equity. And then we did, okay, well, let's talk about debits and credits. And then we talked about, all right, let's talk about our chart of accounts. Last week, and every week we practice, we do exercises and we walk through, this is what it really looks like on whatnot. So that is our Ledger to Leadership. And we're going to go 12 weeks. So it lasts for 12 weeks. And by the end of that 12 weeks, you as a reseller should be able to create a set of financial statements that you can do. Yes, my love, thank you for letting me know. I will take care of that. You'll be able to create a set of financial statements and then also use those to make decisions. Analyze them. Well, what does this information mean to me? It's like, okay, great, Tracy, I've got all these numbers. What do I do with them? You'll be able to really utilize your financials to make good business decisions. That's Ledger to Leadership. And it's free. Come to Whatnot. It's free. You don't have to buy or do anything. Just show up. I would suggest a pencil and paper. Be ready to do some screenshots. I do use not a whiteboard. We do it electronically where my husband puts it on the screen and I'll write out stuff for people to see. So be ready to screenshot things. I do have a book. It is in my bin now, or a PDF. If you're the type of person who you're like, I want the notes. I want all the examples. I want the worksheets to fill out on my own. There is a book or a PDF that also goes along with it, but is not necessary in order to be there. The other part of that is the CEO Challenge. So that's not necessarily Ledger to Leadership. The CEO Challenge is a raid train that I have. Let me correct myself. It is a challenge raid train reality show, unlike anything anybody has ever seen on Whatnot, coming in the month of April. 6 sellers, I just told them who they were. I'm going to announce them publicly on Monday, have been selected to be part of this. 6 participants. In our CEO challenge, every single week, these participants are going to be focusing on one area of their business that they're improving. And then on Tuesday evenings, you'll see it's called the CEO Challenge Showcase. Every Tuesday evening, it'll start with me explaining the challenge, and then we'll progressively, like a raid train, go into each seller. Well, they'll be talking about their challenges. What are they working on that week? What's going well, what's not? Or they'll be doing a selling show where they're practicing those skills. That is the CEO challenge, and that is for people to end April better than where they started. It's to work on the business. So the tagline is building the business, not just the show. So it's really helping 6 participants build the business. In addition to that, before April 7th, before the first CEO challenge night rolls out, I will have the challenge ready for everybody at home. If you want to follow along, if you're not one of the 6 and you want to do this in your business, there will be downloadable like PDFs for free that you can download and read the challenge and get all that information and be like, okay, you know what? I'm not part of this, but I'm going to do this at home too. So that will be available. Tabitha, I did not, wasn't ignoring your question. I was just trying to finish my other thought. So Tabitha asked, can I claim 100% of the meal when I am outsourcing? No, you may not. When you're just outsourcing for the day, you wake up on Saturday morning, you're going to go shopping all day long, and you buy lunch while you're out, that's not deductible. That's just a normal lunch. When meals become deductible is when you go to a specific business meeting as a meal, and there is a business purpose for that meal, that's deductible. When you're traveling on business purposes and you need to eat because you're traveling, that becomes deductible. Just the fact that you eat while you're sourcing is not deductible. That's no different than you going to a 9-to-5 job and having to eat lunch. Your employer doesn't pay for it and the IRS doesn't pay for it. They won't do so either when you're sourcing. So, and that I've also heard that that's advice other people are giving. And when it comes to the advice other people are giving, I'm going to tell you one name that I will recommend on Whatnot that is another CPA, and I trust her advice when it comes to taxes, and that's Double Trey. I'll tell people go see her, and she tells people to come see me. She is a CPA. She practices as a CPA and has a license. Other than that, if somebody is giving you tax advice on Whatnot, please go back and make sure you're checking it with your CPA, your own tax advisor. It's just one of those things that are so specific. And now, I am not saying that nobody else knows anything about this. There are a lot of smart, knowledgeable people on Whatnot. However, there's only one that I would actually listen to for advice for myself, and that's Double Trey. There are a good number of sellers. Yes, there is. And that's where I say be careful. And even with me, I'm going to tell you stuff, but I always 100% encourage you. Use what I tell you as a base. Like, okay, now I have some talking points to go talk to your tax person about, because each one of you have a unique set of facts and circumstances and variables that go into your situation. And there is not one answer that's going to fit for everybody across the board. So I try to stick to, this is what the IRS has to say. This is how to apply it. This is what it looks like on your tax return. Here's various scenarios you may see this happen in. You still need to go back and talk to your tax professional. It is just highly important. And it's not just tax advice. There's a lot of advice out here. We all just have to be diligent in doing our homework in any advice that we're given. That's probably the most diplomatic, easiest way to say that. Let me just see if there was any other red flags. I jotted down 7, and I think we talked about them. Failing to report your income over $1 million. Here's another red flag really quick is Schedule Cs, which are, most of us are Schedule C, that have over $100,000 of income and are cash intensive. Cash intensive is the key part of that. Just because you may make over 100K on your Schedule C doesn't mean it's a red flag. But those that are over 100K and cash intensive, because cash is where you start hiding things, right? So when you think about hairdressers, the ones that aren't really doing a lot of 1099s, it's hard to track. So any of those businesses, not so much us, but if you have a high volume of Facebook sales, that could kind of put you into like, hey, I need to really have all my ducks in a row, right? There are actually community hosts who are qualified to answer terms of service questions. Just search community host. 100% yes. There are community hosts that they have some insider information. They actually meet with Whatnot. There are a handful of these community hosts that I would highly, highly recommend, that I think are wonderful people, sellers, and they're people that I listen to what they say, and I really highly respect what they say. JJ Shopper, De-Archivist, Reworkers Passion, those are all community hosts. A Hodgepodge, Sassy Vintage Chick. Those are ones that the ones that I go to and that I listen to. I'm sure there are others that I'm just not aware of, that I don't have the experience with. Those are ones that I go to. Now, when it comes to terms of service, you guys have access to terms of service. Always go back. Any seller, anybody tells you anything about, oh, well, terms of service says this, guess what? You have complete control to look it up and see if you agree or not agree. The Live Seller Collection PDF, can we put it on our expenses? Yes, you can, because that's educational material. So that is 100% business education material, legitimate to deduct. When you're thinking about what can go on your tax return, there's two words you got to think about. Ordinary and necessary. The IRS specifically uses those two words. Is the expense ordinary and necessary for your business? If the answer is yes, then it can go on your tax return. Now, think about that. They use those two words specifically because what's ordinary and necessary to me may not be ordinary and necessary to a clothing reseller. If I buy a clothing rack to display my vintage decor, that doesn't make sense. But for them, a clothing rack makes perfect sense as a business expense. If I purchase books to learn about the jewelry I am selling, yes, that is deductible. That's education materials, particularly if they're reference books where you're looking up different makers and stones and whatever. You can tell I'm not very knowledgeable about jewelry, but when you're looking up things like that, yes, that is. Do you know how we can contact our category whatnot rep? I do not. That would be a good question for one of those community hosts. I would start with the community host first, and then if they can't help you, they should be able to help you. They should be have somebody. Try help.whatnot.com or their bot. Here's a trick to the bot. It doesn't work all the time, but when I've really pressed, it's worked for me. You start with their little FAQ, you get the Whatnot bot, and it'll ask you, did this answer your question? Hit no and ask your question again. Eventually, it's going to say, would you like me to put in a ticket? That ticket usually goes to a more sophisticated bot, but if you got to be diligent about it, you usually can get to a person eventually. When I have an issue that I'm like, look, I'm not relying on the bot, and I don't do this every single time, don't abuse it, but if there's really something, it's a little bit longer of a process, but it's worked for me in the past. JJ Shopper is wonderful. And you guys, if you like JJ Shopper, y'all, Reselling Roundtable. If you don't know about this, we do a podcast on YouTube, myself, which is Zoe's Treasures. I Love Discounts. That's Tony and Lysandra. They are in the jewelry category. They used to be in food and health and beauty. Now they do jewelry. And Green 13, Jeremy from Green 13. Jeremy is in the estate sales, jewelry. He does a few different categories. We come together every Sunday night at 6:30 p.m. and we do a podcast on YouTube. That's a live podcast where you could ask questions just like here on Whatnot. And you get 3 different perspectives, 3 different answers. We all have different business models, different structures, different ways that we operate, and different expertise. It's a really cool format for you to come and do like a chat show type format. But JJ Shopper is going to be our very first guest this Sunday, 6:30 p.m. on YouTube, Reselling Roundtable. My husband will put it up there for you. JJ Shopper is going to be our guest. So if you love JJ, don't miss it. She, besides being knowledgeable, besides being a Whatnot OG, a business owner, she just announced recently on one of her shows that she has gone full-time on Whatnot, quit her 9-to-5. She is a hoot. She is just so funny. Her laugh is infectious. So Sunday night, 6:30 is going to be a blast, y'all. You don't want to miss it. They are also, all of those Reselling Roundtable, because it's on YouTube, you can go watch any of the podcasts at any time. How and when would we get a 1099 from Whatnot? This and that. So Whatnot was required to send those out by the end of January to you. And what they do is they make them available through Stripe. So you have to go into your Stripe account to access it. Now, Whatnot is only required by the IRS to make that available if you had $20,000 in sales and 200 transactions. So if you didn't meet both of those thresholds, Whatnot would not have given you a 1099. That doesn't mean you don't report the income. You're still responsible to the IRS to report your income. But that's, if you did meet those, go into your Stripe account, and that's where you get your 1099. Tabitha, thank you. I think I just saw it pop up, so my husband will get out. We'll take it and get anything out to you right away. If you didn't get a 1099 and you're like, look, I met those thresholds, go check the Stripe account. The other thing is you can contact Whatnot, go through Whatnot. You can also, Whatnot sends a copy of those 1099s to the IRS. They're required to do so. You can request a transcript of that through the IRS. So you can always go to www.irs.gov. And if you type in like 1099 transcript, tax transcript in their search bar, you'll find instructions on how to get a copy of that 1099. So if you know for a fact you met both of those thresholds and you cannot for some reason get it from Whatnot, go to the IRS and they will give you a copy. And that's a safeguard because you want to make sure that your records are showing the same information. If you only made 5K and you got one sent to you, it's probably because your state has a lower threshold. Some states have lower thresholds where they're required to send them. But on a federal level is $20,000, 200 sales. So normally when I do the tax talks, I will touch on states every now and then if I know information about it. But let's face it, there's only 6 states that don't have state tax. All the rest of the states have some type of state income tax. There's no way. I've been a licensed CPA in 4 states that I would be able to know all of the state taxes. So I try not to speak about state taxes too often. I will tell you most of the state rules tend to follow federal rules with a few nuances for each state. In general, they follow the same federal rules. All their 1099s should be sent through Stripe. As far as I know, Whatnot is not sending them any other way. It's all through Stripe. They send it through email. That's really odd. And in the mail. Interesting. I'm surprised that they sent it through email because they have to meet such strict privacy concerns to like protect people's PPI, personal identifiable identifiable information. I always mix the acronyms up. That they would send that through email, unless maybe they sent a link where then an email with a link that you can go and get it securely. There's a lot of restrictions around that type of information and how secure it has to be. As an added tab in your account, there's a tab in your financials. If you guys are not aware of this, there was a link. Okay, good. I had a little heart attack. I'm like, oh my God, because I just know that, like, especially with big companies like Whatnot that deal with Social Security numbers, there's so much information. With being working for CPA firms, that's one of the things. Like, there's just so much security concerns. This is another thing. If you guys don't know, in your Seller Hub on a computer. I don't really use my phone to go in the Seller Hub. On a computer there, and you're in your Seller Hub, there's a little finances tab. If you click on that, there are statements and reports. You can go over to the reports. You can get a weekly, a monthly, and an annual report that Whatnot will summarize all your information. At a bare minimum, you should be pulling that monthly report. Every month, on the 4th of every month, they release your monthly numbers from the month before. It's a pretty decent report. That's the one that I use to reconcile to my information on a monthly basis. I would highly recommend. Is it on your phone? That's awesome. If you guys are phone people, more power to you. I can barely see it, let alone hit the right buttons. I hate working on my phone. I always have my computer with me just because I'm so terrible. But I'm old and I can't see, so that's a me problem. But definitely check out, if you haven't spent time just exploring all of the tabs that are available. And I do know there are different options on your phone and the computer for what you can get to and what you can see and what you can do. There's some things you can only do on a phone and there's some things you can only see on a computer. Take some time and go and explore. They actually give you a lot of good financial information, a lot of data that you can pull that you can use to help in your businesses. So statements, yeah, there's all kinds of stuff. All right, y'all. With that, we've been on for a little over an hour. My daughter is sitting here. She's like, I'm hungry. Take me to get some food. So I need to go feed this child before she rebels on me. And I appreciate you guys for being here. I'm still going to be here every Friday night. We're going to do Friday nights through April 15th. So for a couple of more weeks. And then after that, we just do tax questions, either on Monday, Wednesday, or Fridays. Come to any of those morning shows. And I'm always happy to answer tax questions in any of those shows. Come over and say hello. They're saying hi, Zoe. Come over here. Come. I'm about to go, so come over and say hello. This is Zoe of Zoe's Treasures. This is my cheerleader. This is why we're here this weekend in Nashville, is for her to do her cheerleading thing. All right, y'all. Everybody says hello to you. Thank you guys so much. Y'all have a great weekend. Go do something fun this weekend. Have fun with your sourcing. I hope you find some really cool stuff. And we will see you. Yeah, we haven't even started cheer yet. Natural State of High. Get this real quick. Get this before I raid. No, before I raid. Natural State of High. I know you have kids in sports too. So we're at a cheer competition. Tomorrow night, she competes at 8 o'clock and at 10 o'clock at night. And then Sunday, her awards Sunday night are not till 11 o'clock at night. How crazy is that? These are kids. And they start early in the morning. It just happens to be her teams are competing. 10 o'clock at night. That's past my bedtime. I don't know how I'm going to stay awake. I'm worried about my kid, but I'm going to be like over there falling asleep. So anyways, y'all, they're usually up. Usually the kids are. I'm not. So lots of coffee. Yes, a ton of coffee. All right. My husband says he's found somebody to raid. So y'all have a great weekend. We're going to go raid. Please don't forget Battle of the Best on Sunday. I got a really cool cameo set coming. Bye, everybody.
We're going to go visit someone that is going on their second show. So hang out, say hello, and hopefully you find something interesting. Thank you for joining us.